Okay, and welcome back, students who are taking financial accounting. And in this series of videos, we are working on the assigned homework problems for Chapter 5, the exercises, which are Group B. And come on here, page down. Note, accounting is about understanding the concepts and then applying that understanding to the situation at hand. If you get the application aspect wrong, that is one thing and is easily remedied by watching someone else work the problem. However, if you don't understand the concepts, that is a whole other thing. Watching a problem worked out will not help if you do not understand the underlying concepts. Go back and study the text material again and watch the theory videos. If you still don't understand the concepts, then either email or telephone an instructor to get help with that understanding. Right, so we only have 2 more problems left for the exercises here, so they should go relatively quickly. Right, get my pen again. Okay, so 5-38. It says Mobile Audio sells and installs audio equipment. During a recent fire that occurred in its warehouse, Mobile Audio's entire inventory was destroyed. Okay, so the entire inventory was destroyed. The entire inventory. So if the inventory was 100,000, right? Now it was destroyed, so now the inventory is 0, right? So the inventory is going down, and we're going to have to adjust that inventory. If it goes down, we're adjusting it over to cost of goods sold. So the cost of goods sold goes up, right, by the 100,000. But we don't, that's just the thinking in the back of my head. I haven't even looked at the data yet, right? Mobile Audio's accounting records reflect the following information. So we have beginning inventory, net purchases, net sales, and a gross profit rate, which means we're going to have to calculate our estimated gross profit. Use the gross profit method to estimate the amount of Mobile Audio's inventory loss. Okay, so we have a beginning inventory of 58,000, right? And then we had net purchases of 287,000. So that means our goods available for sale, right? For sale is 5, 13, 14, 345,000. Okay. Now, that's available for sale. Now we have to deal with our cost of goods sold. Okay. And so for our cost of goods sold, our net sales are 486,000, and then we have to take our estimated gross profit, right? So we have a rate of 43,000. So if I have 486,000 and I multiply it by 43%, that's going to give me 200 and, let me do the math here, 486 times 43%, that's going to be 208,980. Okay, so my estimated gross profit is going to be 208,900, which gives me an estimated cost of goods sold of, let's see, subtract 486,000 less the 208,900, which means my estimated cost of goods sold is $277,020, and then that means the cost of my inventory destroyed is going to be 345. It's going to be $67,980. $67,980. Okay, so remember, when we have this gross profit rate, when we have this percentage, we're talking about estimations. Okay, so it's always estimated gross profit, estimated cost of goods sold. Okay, because we're working with a percentage, we're not working with a specific amount. But in either case, we're following along here with the gross profit method. We start out with our beginning inventory, we add in our purchases, which gives us an amount available for sale. Then we subtract out our cost of goods sold, and that gives us our inventory value, however, our ending inventory. However, in this case here, we had to figure out what our cost of goods sold was, knowing that we have our net sales here and we have this gross profit rate. And so we do that extra calculation, and then that gives us, the cost of the inventory that was destroyed. Okay? All right, so that's that. Last problem. Let's see here. Inventory turnover. So Pete's Plants has the following information for July 31st. Compute the rate of inventory turnover for Pete's Plants for the year ended July 31st. Round the results to 2 decimal places. Okay, so for inventory turnover, the formula is our cost of goods sold divided by our average inventory. Okay, and remember, our average inventory is made up of beginning inventory plus ending inventory, and we divide that by 2. That's how you get the average. Okay, so that's the formula for the average inventory. Right, so what do we have here? Okay, so let's do the average inventory first. We have a beginning inventory of 44,300, and we have an ending inventory of 21,000. So we add those two together and divide by 2, right? When we do that, we have 44,300 plus 21 equals, that becomes 65,300, and we divide that by 2, which means our average inventory is 32,650. And so our average inventory is going to be 32,650, and our cost of goods sold is 280,100. So we take the 280,100 and divide it by the 32,650, and we end up with an inventory turnover rate of 8.58. Well, it's actually 8.578, but we're rounding to 2 places, so our inventory turnover is 8.58. Let's see here. Did I do that wrong? Yes, I did. Because this is not, everybody makes mistakes. This is not 21,000, this is 21,200. All right, so 44,300 plus 21,200 is 65,500 divided by 2 gives me 32,750, and that's my average inventory, so 32,750. So if I take 280,100 and divide it by 32,750, now I end up with 8.552, which means I round to 2 places, round down, so I had 8.55, and that's the inventory turnover for 2014. So the rate of inventory turnover for Pete's Plant was 10.24. 10.24 in 2013. Has the rate increased or decreased? So obviously it's decreased, because if it was 10.24 and now it's only 8.55, that means it went down, it decreased. Okay. So that's it for this problem. And again, if you don't understand the concepts, you don't understand the theory, read the book, rewatch the theory videos, and contact an instructor. But we'll see. The next thing that we have to do is, of course, working on the assigned problems for Chapter 5. So we'll move into that series of videos next.